Rally on is the motto for today as stocks look to open sharply higher after yesterday's consolidation from the previous advance. We'll talk about that today, where we go to and what happens next on today's edition of 3 Minutes on Markets and Money. So as we discussed yesterday, we already had two kind of positive action days in the markets, and we said that yesterday it would be okay if markets just kind of consolidated and hung on to their gains, because previously what we'd seen is these sharp up days followed by sharp down days that gave up all of those gains. Well, that didn't happen yesterday. Markets did consolidate. They did hold on to their gains. In fact, we had a green candle yesterday as well. So we've now connected 3 green days in a row. Markets are now slated to open up sharply higher this morning. The Dow up close to 400 points at the open, along with the NASDAQ and S&P trading above 1%. So this is going to help provide some more lift to the markets in the short term, and potentially we could start to potentially see that short covering starting to come in. That's going to help lift prices as well. Our initial target on SPY is still this $416 level right now. That's the 20-day moving average. First level of resistance, also part of that downtrend we're currently in right now as well. So there is some fairly strong resistance right at that level. So 416 is the first target on this rally. If we can get above that, then we're going to start talking about potentially about 430, 431 on SPY. Those are probably the two most logical targets for this kind of reflexive rally that we're looking at right now. And we'll want to use that rally to begin to reduce risk. We'd use this opportunity here at these bottoms to add into some stocks that we really liked in our portfolio, like United Healthcare, Verizon, bought a little bit of Costco yesterday, looking for that rally to kind of carry those positions up here. And then we'll look to rebalance that risk, reduce some of our higher beta names, and again, kind of make that more subtle shift to the value side of the markets as we start to look forward into the rest of this year, as the Fed is hiking rates, reducing monetary liquidity, inflation still raging in the economy, economic weakness, consumer sentiment very negative. That's going to continue to apply pressure to stock prices as we go out further into the year. Now, if the market is able to break this channel that we're in right now and make a move higher, then of course we can always put that cash back to work. But initially use rallies to sell into, because there's still a lot of people that are trapped into this market from this decline this year, and they're all looking for an exit. So most likely any type of good strong rally we get is going to be used for selling pressure, and that's going to limit that upside. We did get a money flow buy signal yesterday. We're still oversold enough on this market to provide some more fuel here, but this oversold money flow condition suggests that this rally does have some legs to it. So we'll pay attention to it here over the next couple of days. If we can start getting some confirmation of short covering here and market starting to stabilize, then that's going to give us more confidence about where this rally can go to next. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.